And joining us now as we talk about the market trade action we saw on Thursday as we broadcast live in New Orleans. He joins us from his office in Wisconsin. Bryan Doherty, Senior Market Advisor at Total Farm Marketing, is our guest analyst here today. Bryan, always good to catch up with you, sir, and hope the week's going well. Looked like a solid recovery in the soy complex on Thursday and a good day in the livestock trade, too.
You bet. Yeah, a lot of back and forth lately, and beans did have a solid recovery today, up 14 today in the March contract, closing at 1534, and that's after losing 17 and three quarters yesterday. So the net of the last 2 days is about 3 cents lower, 3 to 4 cents lower. Very interesting point on the charts because if you're a chartist, we're in this nice what we call channel line of prices that are working higher. But on this last recovery, we have yet to take out the high from mid January, which was 1548.5. So the significance of that is right now we're forming, if you're a chartist, what's called a head and shoulders formation, forming the right shoulder. If prices don't break into that high and then fall apart, then all of a sudden you've got a negative looking chart with a downside objective, and it's eerily reminiscent of how the charts looked back in June when they were reaching their highs and then fell apart. Same type of formation. So something to be watched for sure.
Mm-hmm.
Corn, not a great looking day despite a good export sales number of 67 million bushels, Jess. But had a good thing going this morning, 4 or 5 higher, and finished 5 3/4 lower in March. And December gave up a penny and a quarter. So kind of a disappointing day if you're a little bit supportive or bullish corn.
Yeah, I think overall, you mentioned to me the export sales before we went live here. Fairly good day, corn, beans. But, looking across this corn market, just kind of a struggle. Maybe I know yesterday we saw some spread, intermarket spreading, maybe a little bit of that today. I just wonder, what the trajectory is in this corn market now. I know 690 has been overhead resistance in this March contract, Brian.
It has, and it held again here in this last go around. So when you look at the chart, it's a kind of a precarious chart because if you connect the low from summer and then the low from fall, you get this nice line, and then the market came back down and tested that low in early January, and it's holding well above that. And then if you connect the high from summer and then the highs from fall, so you end up with kind of this big wedge, and the market's actually breaking out to the top side of the wedge and holding above now what's called the downward line. Consequently, you got a nice looking chart, but it's not breaking that top side, and that's getting concerning, especially when you have days like today that you only get so many chances, and if it doesn't happen, then you run the risk that a lack of news or negative news comes along or a report. We got a report next Wednesday, so the market will start to gear up for that on the 8th.
I noticed as well, crude oil's been slipping the last few days. We got a little bit of pressure there again on Thursday, $75 range. I wonder how much that's maybe weighing into the commodity space, into the grains and oilseeds, Brian.
Well, it's usually not supportive. As
Mhm.
energies go, a lot of times the grains go, and when energies really had their run last year, grains were right with it. So there is that. And when you look at something like the crush in soybeans, we're not selling a lot of soybean oil. We're selling
Mhm.
meal, we're selling beans, but not a lot of oil. So that's kind of an anchor on the market. And if the energy market's not really leading the way, that's a concern. Yesterday, the Biden administration talked about some study or something indicating kind of the green light to drill in the northern slope of Alaska, which to most of us, it kind of caught us off guard. We thought that was off hand, off limits. Apparently not. And when you're um, when you're looking at tightening energy supplies in a war, maybe there's some merit behind thinking about moving to those oil fields. But anyway, that was in the news. Kind of had a down push on energy yesterday and probably again today.
Well, I think as well here in the grains, we talk about risk management a lot, corn, beans, et cetera, wheat markets here. Just with some of the back and forth, we kind of have the weather market with South America as well as we watch the dryness in Argentina and the wetness in Brazil, the harvest delays there. I feel like some of that back and forth ebb and flow here day to day right now. Just wonder, risk management wise, still feels like a good spot to get some floors locked in at least, or get some things moving, whether old or new crop, Brian.
Yeah, we just really haven't changed at all. When you look at like new crop prices. So when I say change at all, we're at 5.95 in December corn today. We're at 5.95 on December corn on January 6th. We're at 5.95 in December corn on December 6th. So we're just we're on the slippery slope. I want to sort of reiterate again, if you want to do yourself maybe uh, I don't want to say a favor, but give yourself a visual. Look at the long term charts. If you don't have them, let me know. I'll get them to you. But of corn and soybeans, they're high priced. They're
Hmm.
high priced commodities, and I've used this analogy that something like corn. Uh, Jesse, you and I and 10 other people might be in a room. We're all bullish corn, but none of us are buying.
Hmm.
So it just sits there. So there's a bullish argument, but nobody's stepping up and buying. And at some point, somebody says, "Well, I'm going to sell if it's not going up." And the next thing you know, you're on this again slippery slope, and that's my concern. It's only February 2nd. There's a whole lot of weather in South America and the U.S. In front of us, but I also want to, reiterate that there could be one scenario that develops, and that is we just kind of don't rally at all. We just stay flat, work lower and work lower and work lower as we plant a crop, and then if we have good weather. So
Hmm. I want to talk a little bit on the livestock side. Cattle, hogs, very solid day there on Thursday. I know in the cattle market, we had the cattle inventory report earlier this week. That's been a factor. What are your thoughts in the livestock trade here as we are working through this week?
boy, we've talked about it, and the supply side, it's arguably as bullish as I can ever recall because you're shrunk the herd and you're not shrinking the population.
Hmm.
And you got this nice big inverted head and shoulders formation on the chart that's an upward sloping chart, and that's a formation that would argue that you might have another oh $3 $4 to go to fulfill that. So can we get to 170? If you asked me a week ago when things look a little softer, I thought, well, given inflation and sort of the economic concerns about not only US but worldwide recession, I doubt it. Now all of a sudden you got some spark, you got some life in the market. Doesn't look like it's topped yet, and it looks good. I just don't know if the consumer can continue to pay higher price in the supermarket, and maybe they can. Good market, good supply or tight supplies, feeder cattle, new highs. Everything looks pretty supportive there.
On the hog side, I know there's been some talks watching the charts, maybe a double bottom. Obviously, a good day Thursday. What are you seeing in the hog market? Is there a double bottom maybe shaping up there, Brian?
Yeah, we had a good close today, and this thing really kind of got hammered pretty hard yesterday, and just as impressively, kind of bounced off that low, and then today had a good follow through day. So I would argue there is a double bottom on the charts. I'd argue the market might be viewed as oversold, and uh, we're starting to maybe see some crossover in stochastics that would argue that if you're going to take a shot at buying hogs, you do it sooner than later.
A couple more things, real quick, before we wrap up today. Dairy market, I see a lot of green on the screen there. Thursday. What's your summation of how dairy trade's looking this week?
Well, still pretty tough. I mean, today was up. Yesterday was new contract lows, but not the worst finish. And some follow through the top side today. So the overall trend remains down. I will say if you're kind of arguing for some sort of signal, what's a signal? Well, maybe at the bottom of a trend, you get a lower morning, firmer afternoon, higher than the previous day, and a stronger close. That was the April contract yesterday. Um, that was a pretty good signal. Same thing in the May contract. So you're starting to get maybe this idea of a bottom forming. Now we saw this same kind of signal on the 23rd, and the market kind of fell flat after that. So one day doesn't make a market, but a pretty nice reversal yesterday, firmer close today. Still dealing with the idea that lower demand, more supply. Um, yeah, I don't know. I think we're low enough in milk, but we'll see if the market buys that bias.
Fantastic. Brian, any other final thoughts? Anything else you want to reiterate for us here before we wrap it up today?
Again, I think I'll just go back to if you're a corn or soybean producer and you know where prices are, um, waiting it out for better might work. I would certainly argue to get started on 2023. Hope to be wrong, sell some more, get an average price built up there on more bushels. Sometimes what happens, people wait, they're right, the market rallies, then they start to sell, and it drops so fast that's all they sell. So, don't be afraid to kind of start dribbling some of this out. These are good prices. History hasn't been kind to holding bull markets for extended years.
Fantastic. Well, of course, if folks have questions, want to talk with you about things, I know they can reach you very easily there. Phone call, email, many ways to get in touch with you at Total Farm Marketing, isn't there?
There sure are. And any of those ways work. Phone call is 800-334-9779. Email is Bryan with a Y at totalfarmmarketing.com, or just look us up on the web, www.totalfarmmarketing.com.
Bryan, always a pleasure, sir. Thanks for joining me for a little bit here today. And I know we'll look forward to talking to you next week. Have a great weekend. Thanks so
All right.
much.
Thank you, sir. You bet.
Bryan Doherty, Total Farm Marketing. That's going to do it for Market Talk here today, live from New Orleans at the Cattle Industry Convention. I'm Jesse Allen. Have a great afternoon.